Good afternoon, everyone. Hope you guys have a great weekend. Had a great weekend, some time to relax, spend some time with family. Welcome, Gabe Velazquez here with you, transparenttrading-solutions.com. Again, everybody, pull up the charts. Give you a couple of minutes here. Everybody should have their charts up and running. Okay, and again, subscribe to the channel, everybody. Give me the thumbs up, put some commentary. I appreciate some of the commentary coming through. All right, so let's get into it. I was with you Friday, and we had the holiday, so there was some trading over the weekend. As I mentioned on Friday, I did mention to you guys that we would have a futures market. It was, as expected, fairly quiet. We came in this morning kind of meandering higher, if you will, and then we got hit again. But then, that 30, again, the same levels we've been discussing. So all told, really, I think I mentioned this to our members today, as we could be in the midst of basically range trading. Hey, how you doing, JT? Hope you're doing well, my friend. Nice to see you. Okay, so looks like we may be just putting in a range. I mentioned that 3,900. I wrote about it this weekend. Interesting, how we always kind of want to extrapolate. I call it the message of the markets. Clearly, everybody is very bearish. I came in bearish about 3 weeks ago when we were sitting up around 4,300, as you guys recall. It's interesting because, again, getting an edge in trading means that you travel, you're usually on the road less traveled, right? Think about what was going on at 4,300. Who was bearish then, right? Similarly, if you recall, back in June, I was writing about getting long, and who was what was the tenor, what was kind of the tone back then? Everybody was bearish. So it's really interesting how the markets really work. Now, all told, I mean, from a technical level, really, we haven't made any kind of significant headway that would change. I kind of mentioned Friday last week that we're kind of in no man's land in the S&P. Let's just kind of go through the markets again. You guys should have your charts up. And what I mean by no man's land is essentially, I did a webinar last Thursday talking about anticipating trend changes, right, at extremes. And if you think about where the highest probability trade setups and where you're going to get the biggest kind of bang for your buck, risk reward wise, it's always going to be, again, very simply, how far has price traveled from one turn to the next before returning back. And so if you look at your daily chart of the S&P, we made that low 30, back in mid-June, right? That low roughly around the 3650, 3660. We had that massive rally and then turned around 4,300. So if you just really kind of just focus on those two, I guess we would call them swing lows. I guess is the term we would use, right? I call them big fulcrum points or big turning points, which is really what we need to focus on. We are almost 3/4 of the way. In other words, we've retraced from that low in June to the high here recently in the last couple of weeks, 4,300 in the S&P. We've come back about 3/4 of the way, right? And now sentiment is turned really, really bearish. Now, what you will find fascinating, and again, I talked about this at length or more in detail in my webinar, is the middle part of the move is always going to be tricky. And if you look at your charts and you were buying, there have been some bounces along the accumulation areas along the way, correct? But notice what's happened is the middle parts of the move are going to be a lot more challenging to trade. And I still believe we're kind of in that. We do have some levels below that I'm looking at. And the ideal setup I'm looking at now from a bigger perspective, obviously you can, even today, if you look at your charts today, it was just kind of choppy range trading, more or less 3960, 3900. We have about a 60-point range. If we break 3900, there are some levels below still that look okay, not great. Namely, I'll give you one. There's a third right around the 38.44. I'm sure you guys can spot it, right? That could be something there. Now, the bigger moves, which I'm going to be looking at the VIX as kind of the beacon. As you guys know, I'm using that. I talked about the VIX. When the VIX dropped to 20, that was right at the highs, and I did mention that, and I was talking to you guys about that, indicating complacency. VIX is sitting now. You need to track the VIX. It's sitting around 27. One big swoosh down, getting that VIX above 30, particularly around the mid 30s, with a new low in the S&P would be a great buying opportunity. And I would actually maybe take on some SPY, and that could be a monstrous trade on a future side as well, by the way. Where that level I gave you guys in the NASDAQ, that's good for almost 1,000 points. That's the kind of stuff that you got to salivate over. But we're still not there yet. So in a nutshell, we've got that that 38.40 area, which I think is going to be the last kind of level that would hold, because below that, there's a bunch of pivots and so forth. So I can see us going into the mid 30 on the S&P. Let's actually deal with that on a day and week to week basis. Again, there's no sense in talking about it at the moment. Okay, does that make sense, everybody? On the NASDAQ, similarly, now the NASDAQ clearly still the weak market. We did get a nice bounce off that 11,930 area, very similar to and I think JT, I think that's the one you're talking about. I think I identified this the other day with you guys here. And then below that, there really isn't anything until below 11K, right? So, and so I think we're probably gonna try to hold on here. One thing that is going to be really key, and this is kind of a little nuanced today, the bond market, right? And I've been telling you guys, again, put a chart side by side. One of the things that's interesting today, though, is that the 10-year, as you guys saw, the 10-year and the 30-year. By the way, we are in that TLT position, working out really nicely for us. If you guys don't know options, or you're you're struggling, take me up on that 5. Go to the links below, sign up for the newsletter, and you can come in with me for 5 days for free and check out what I'm doing in there. We'll look at charts, give you some levels, and so forth. So don't be shy about that. It's free. Like I say, free is the best word in the English dictionary, right? And I'm not going to strong arm you for anything, so don't worry about it, okay? Anyways, all right. So, yeah, once we break down, so my point to everybody was that the markets, I would in fact say, were somewhat resilient today, if you think about it, in the midst of look at what the 10-year did. Look at what the 30-year in particular, and the TLT. In fact, the TLT, which we're long 113 puts on that thing. Look at where it closed today, right? So the TLT closed right on the lows. And remember, I've been talking about TLT going to 100. I don't know if you guys have been following along. We closed right at 107.50 50. I do suspect, and again, it's not, it's not obviously not just conjecture on my part or whatever. It's, just look at the chart. Look at the weekly chart of TLT, and you can see it clearly. That's my target on this position right now is 100 on the TLT. There's actually the daily accumulation is going to be around 97 on the TLT. If you guys are not familiar with TLT, that's the 20-year ETF. The reason I've been using ETFs for my members is because we could use options with that. And as you know, if you've been trying to trade the bonds, the levels are really wide, extremely volatile. If you can afford to risk, $500, $600, $700 on one contract, then obviously the bond market is where it's at. Tons of volatility there, whatever. But always an alternative for you that don't want to assume that kind of risk or have gotten burned too much on the lately, taking too many losses trading the bond market. Look at TLT, look at options on TLT. There's always something that you guys can do to participate in these market moves, and all about risk management, right? But it's you got to understand how that works. So that was interesting today. I kind of wanted to share that with you guys, right? And at some point, the market will. In other words, when one of the things about the message of the markets is and be an objective observer. What happens is we know that rates have affected the NASDAQ quite dramatically over the last 6 months. However, when that stops happening, in other words, like on a day like today, we didn't quite get I think the threshold is really still 3.5 on the 10-year. That would put the price level on the 10-year below the pivot low here, which is that recent low here is about 114.5 on the 10-year. That would take the yield above 3.5, and I think that really would be the next big threshold in the bond market, clearly, because it would break the lows. And then there's nothing till 111 on the 10-year chart if you look at the weeklies. So there will be a point where the market will fully have discounted, or in other words, can live with, if you will, higher rates, right? So in other words, that's a discounting mechanism. And today we saw a little bit of that where, clearly we saw, you look at your charts of the 10-year and all the bond markets really got hit really bad today. Yields were sharply higher. The dollar was up, which I'm going to talk about in a second. But yet the market, i.e. the S&P, the NASDAQ, kind of held up if you think about it, right? Couldn't even break 3,900. The NASDAQ kind of held around, the last 2 days. We actually were unable to break much below Friday's low. In fact, we did break Friday's low, came into that accumulation, and essentially we're right near that. So you would suspect that you would have a big sell-off today with, again, the dollar going up and bonds going down, yields going up. So it's going to be interesting to see. All in all, again, just to wrap up the equities, lots of chop. We know where the levels are. It's going to be very tricky to trade right now. And again, I would caution you from, labeling yourself. In other words, watch what everybody's doing. Look around. Take a look around. And when everybody's telling you that the market's going to crash or the market's going down or, the market is, short everything, whatever, that's when your antenna should be going up. And that's actually when you should start, not to say that the market, won't go down some more, but make sure you don't get caught up selling the lows or shorting the breaks when that's happening. Does that make sense, everybody? I think we're kind of getting close to that. I did write about that over the weekend too. October, by the way, we used to call that bear killer because we typically come in, yeah, exactly, JT. Yeah, I mean, go back in history, like we talked about going into this month. Remember, I was telegraphing this 3 weeks ago, going into end of August into September. Similarly, October, usually we come in with, and I'm hoping we can get a big swoosh down with the VIX jumping, and it happens to be October. That's usually when we get a huge rally going into the year end. So it is kind of setting up for that. We'll see what happens. But in the short term, again, lots of choppy trading. Now let's move forward. So we've covered bonds. We've covered the S&P. Not a lot to do right now. By the way, if we do rally, there's some levels up top that I mentioned on Friday in the S&P, but that's 100 points away. So again, nothing we're talking about. And what's going to cause the market to rally? We probably don't get any kind of sustainable move till next week when we get the next CPI number. This week, so let's shift gears. This week, the big, by the way, the big kind of economic or whatever you call it news is going to be clearly the ECB, right? The European Central Bank coming out on Thursday morning. Why is that important? Well, if you think about it, on Friday, the closing of the Nord Stream pipe line, the gas, Russian gas going into Europe was shut down indefinitely. That's just Russia weaponizing their nat gas supply, and everybody and their brothers talking about what's going on in Europe with inflation, whatever. So I think it's going to be really important. And there's a lot of speculation of not if, but how much the ECB will raise. If they come in with, everybody's talking about 50 to 75, they come in with 100 basis point increase, that's going to bolster the euro. And that would, in fact, drag the dollar down, right? Because remember, the euro is about 58% of the dollar index. So that's going to be really important. So now, also, incidentally, we have the dollar coming into a weekly, monthly distribution. Now, it's been on a tear, but if you look at your charts, it's probably good for a pullback and a substantial pullback. If you go back, everybody again, erroneously, I think, assumes that the dollar is just on a rampage and just goes up in a straight line. How many of you guys, right? If you didn't look at a chart, you'd probably make that assumption, correct? However, if you look at your charts, we've had some pretty nice pullbacks along the way, have we not? In the dollar, right? We went the first pullback came from 105. It pulled back to almost 101 and a half. The second pullback went from 109 all the way down to 104 and a half. And I think we're kind of in the midst of doing that again. Now, what does that imply? That implies that we could have a really nice pop in these currencies that have been under extreme pressure lately, correct? And also bodes well for gold and silver. Remember, I mentioned Friday, I'm warming up to silver. So that's something I'm looking at. And also, notice the euro has been kind of bouncing around, hovering around that parity with not a ton of momentum. If you've been attempting to short the euro along where it is right now, you haven't made a ton of money, correct? In fact, you better be super nimble. So the momentum is starting to kind of waver around this parity level, and with the dollar coming in, it's going to be an interesting situation. So we are at TTS. We're setting up for some opportunities there in the euro. That would be first thing Thursday morning. The press conference, the announcement comes out at 4:45 Pacific, and then there's the press conference at 5:30 Pacific, 8:30 Eastern, and that's when all the volatility is going to come. So we expect a lot of volatility in the currencies, and by extension, the metals, right? Gold, silver, and I would say, also that would probably extend out to the equity and bond markets. So that's going to be the big one this week. I'll be with you guys on Friday. We'll review. But just so you guys can look at the dollar 110.73, there isn't anything to kind of lean against right now in the yen or the euro per se. But if something develops between now and then, we could be super aggressive in taking a long position, obviously with a very small size, giving that a shot. So, okay. So if you're interested in that, that could be something to look at. Also, the British pound, they just got a new prime minister, 114. I think I mentioned that level to you guys on Friday. We did bounce a little bit off that, but again, it's all going to be predicated on the dollar. So, a lot of these currencies are setting up for a really nice pop. You got to know what you're doing. You got to see the levels. So we will at TTS be setting up some opportunities there across the board. Okay. Any questions, by the way? You guys have any questions on that? Does that make sense? Okay. All right. So I've also been talking about the grain markets. Hey Terry, how you doing? And Tina, hi Tina. So, hey, it was great talking to you today, Tina. Yep. So, last but not least, actually, we still got about 8 minutes. Nat gas. We're also short nat gas, right? We're in an options position there. It's working out pretty nicely for us. I want to just recap what I've been talking about with nat gas. Remember, I've been talking about fair value between 9 and 10. And what's interesting, again, this counterintuitive, this kind of intuitive, paradoxical view of trading is how ironic is that now that everybody's talking about finally about what's going on in Europe and the weaponization from Russia. I've been saying for the last couple of weeks that at $9 and $10, all of that's been priced in. So now that everybody knows about it, guess what? What do you think's the next move in that gas? And you saw that today. We're positioned very nicely in that trade right now as well. Does that make sense, everybody? So again, be careful not to fall in prey to all that. Does that make sense? So we did put on, I think I mentioned that on Friday. We did put on a nat gas position via the options, because again, just similar to the stock, to the nat gas, to the bonds, very, very volatile market. So it doesn't make a lot of sense to, on a futures contract, I guess you can trade that, but you have to be taking on a whole bunch of risk. So there's other ways to play that. Does that make sense? So, on the nat gas, let's review that real quick, and then we'll end up with oil, which are obviously very, very important markets. So nat gas breaking, if you are looking at your chart of nat gas, once it broke below 9, remember I was talking about 910, you notice what happened. We broke 9 and we just fell off the cliff here. I'm targeting on UNG down in the low 20s, which would take nat gas round trip, which, by the way, that's happened already. As I mentioned the other day, that's already happened 3 times. You remember we've done round trips from 9.5 down to 5 and 6. Last time we actually only pulled back to 7.5. So we were coming back down to the 7.5. I think this go round, we go round trip all the way down into the mid 6s on nat gas. Okay. And there are, some really nice distribution levels that are being printed, if you will. Remember, again, the session I did the other day is once you start getting this momentum to the downside, but this is what most people do, then they'll chase. You don't want to do that. That momentum creates fresh distribution levels that you, if you're patient with, you'll get an opportunity to go short, but not what everybody thinks is chasing momentum. Because what happens is if you chase momentum to the upside, especially with nat gas, you know what happened to you every time you chase momentum near the highs. You just got yourself moited, right? You got your, what handed to you. So similar on the downside. Right now, we're going to come into that $7.50 level in nat gas. I think that's going to be an interesting level to look at. And you will have a bunch of opportunities to go short, but you got to wait for the pullbacks. Okay. Does that make sense, everybody? So that's and obviously now that everybody is talking about nat gas, telling you what's going on in Europe and whatever, I do suspect we're probably going to go much lower because the market already knows about it. Okay. Does that make sense? And that's why I put that position on, by the way, if you guys are thinking about why that is. Lastly, wheat. We are in that position as well. Wheat kind of all the grains today, we had soybeans got hit. Soybeans is essentially just in a range between 13.75, 14, I think 14.85. Corn looks interesting. Again, pulled back. The two grain markets that we're already in wheat, in a wheat position. We still have to break about 850, but we are in that WEHT as well on that one. And then soybeans is a different animal. Remember, that's a whole different kind of grain market. I think if we drop below 1365, there's a nice gap I'm looking at around the 1350 area in soybeans. So that kind of sums it up for us. So hopefully this is being helpful. Again, put some comments in there, subscribe to the channel. If you're interested in spending 5 days with me, hit the link below. No obligation, just, get you guys to see what we're doing, specifics. If you're interested in options, I'm going to run another options course coming up here as well. So sign up for that. I'll probably put out the details coming up here as well. So other than that, again, ECB and more volatility to come, right? Let's see if we, again, I suspect we're probably going to be in a range here, maybe chopping around for a little bit. So be careful and be patient as usual. All right. Okay, everybody, have a great rest of your week. I'll see you on Friday. We'll review some of the stuff. And hopefully you guys are getting some of the something out of this. Again, Tuesdays and Fridays, I'll be with you. So if you want to join me live, if not, I'm getting a ton of views, obviously after the fact. So, all right, everybody, have a great rest of your week. Be careful. Again, Thursday morning, if you're trading futures with the ECB coming out, and then next week is going to be interesting too with the CPI. So, looking ahead and anticipating rather than in the rearview mirror. Okay. All right. Have a great night, everybody. See you on Friday. Take care.